Hi, this is Lance. Today is Friday, April 24, 2020. Happy Friday. And today's topic is the multifamily outlook. You know, probably about 2 weeks ago, I was sharing rent collection data for April that National Multifamily Housing Council published that through April 5th, rent collections were only 69%. Well, they've updated those numbers through April 19th. Rent collections jumped to 89%. 89% of apartment renters paid at least partial rent, which is much more encouraging. However, the concern is going into May and to June, as these renters are maybe depleting savings or drawing upon credit sources, whatever they're doing to pay rent, is that going to be sustainable? Matter of fact, in this article you're going to read below, CoStar is one of the giant apartment market analytical companies in the nation. Going forward into this year, their baseline projection is a 20% decrease in values. 20% decrease in values in apartments, which again indicates the shift from a seller's market to a buyer's market I've been talking about it since the pandemic began. So that's the opportunity, and they make it akin to the 2008-2009 recession. And if you weren't around or weren't in apartments at that time, let me explain what happened. Prices dropped in apartments. You could pick up apartments for less than $20,000 per door. Less than $20,000 per door. Those same buildings you could have been buying back in 2008, 2009, 2010 for less than $20,000 per door were trading just recently at $45,000 per door. Same property. So imagine this. The ability for you to get into an apartment building, low prices, where the price could double in the next few years, and actually shorter time period. I'll explain why in a moment. So you get doubling of the value. At the same time, while you're holding the property, you're paying down the mortgage, or more precisely, your tenants are paying down the mortgage, and you've got cash flow. Plus, you got the depreciation, which you're going to claim on your income tax return to cut your income tax bill and improve your cash flow from job income. So you got all these factors at play. That's why the opportunity is to get involved in apartments. Now, I say that the recovery is going to be much quicker than it was with the Great Recession, because with the Great Recession, the fundamental problem was the fact that debt had seized up. The credit markets had frozen up. We had an infrastructure problem. The banks had problems. That's not the problem we face today. The problem we face today is this pandemic. It's been an event, like the light switch has been turned off. And as we work our way through that, we're going to see the prices dip, but then they will recover much quicker, much shorter time period than what we saw with the Great Recession. That's my outlook on multifamily. That's why I say we've seen the shift from a seller's market into a buyer's market. Now's the time to load up, buying and holding these apartment buildings. So you need to be getting prepared. You need to be in the market. You need to be creating your deal flow and selecting the deals that are going to be presenting themselves more and more and more. All right, have a great Friday. Have a great weekend, everyone. Stay safe.